Elon Musk. Tesla's share price has gone through the roof in the past few years, and it's now getting close to $1,000.990. As of January 21, 2022, the question of whether or not Tesla could or should split its shares in order to lower the price to a level that most buyers would consider more reasonable comes up. The company has split its stock before, and if the last one is any indication, the next one will happen soon. A lot of experts have said that 2022 will be a big year for Tesla, and a split would only prove them right. What does a stock split mean? Should you buy Tesla stock before or after it split? Let's watch this video to find out. What does a stock split mean? By splitting their shares, companies can change the number of shares that are open for business. The market value or market capitalization of the company doesn't change after a split. As an example, let's say a company splits its stock in two for the price of one. In that case, each shareholder will have twice as many shares as they did before the split. The value of the shares as a whole doesn't change even though the share price has been cut in half. One main reason for stock splits is to briefly lower the pre-share price. This makes shares cheaper and more appealing to small investors, since you can buy fractions of a share. A stock split is an important tool for management teams that want to make it easier for small buyers to buy shares. The value of the stocks or their derivatives does not change when they are split, but the prices of derivatives do go down. Share prices of a company can go up or down after a split in the days, weeks, and months that follow. The market capitalization stays the same when a company decides to split its stock. Shareholders may have more than one. The split number still means that each share is worth less. Many times, this lower price per share brings in more buyers. Because of this higher demand, share prices may go up, which will make the market value bigger after the split. But this isn't always the case because of a number of things, such as the basic structure of the company. The only time Tesla stock has been split since its IPO was on August 31, 2020. It was a 5-for-1 split, which meant that each share owned at the time became 5 shares. So an investor who had 1,000 shares of Tesla stock on August 30th now had 5,000 shares on August 31st. If the price of a company starts to go up, it could mean that it's about to split. Like Tesla shares went from about $850 to $950, and then all the way up to $1,200 each. The price went down a little when Musk said he would no longer be selling shares. It was selling at $1,300 in the summer of 2020. Is this a sign that Tesla stock is about to split again? Elon Musk, the strange founder and CEO of the company, said that the shares were too expensive. Besides that, he said that more people should be able to buy shares in the electric car company. Right after that, the stock split 5 times for one. Now, 16 months later, Tesla's price is at about the same level after a huge rise this year. At the beginning of the month, short seller Gordon Johnson started a rumor that Musk might announce another share split to attract individual investors. Sawyer Merritt tweeted that Tesla stock was worth $1,373 before the split. On August 11, 2020, Tesla revealed a 5-to-1 stock split. We've gone up over $1,000 to $1,024 since the split, and we're now at the same $1,300 level. We think Tesla will definitely look into another split of some kind. Let us see what happens. Trying to increase Tesla's free float by lowering the price of its shares, Neil McNeil, who owns the 2-for-1 index, says that would calm down a crazy market cap that took a short dip after Musk said he would sell 10% of his shares to pay taxes. McNeil, whose 30-member post-split index has returned 12.5% yearly since 1996, says Tesla's value doesn't make sense. Tesla has made the world aware of the idea of electric cars. Tesla, on the other hand, is not taking part because it is worth so much. In fact, it is worth more than all of the other automakers put together. McNeil keeps going at about 400. No one else's price-to-earnings ratio is 50 times as high as its. It would have to be in business and making money for 20 to 30 years in order to catch up to that kind of price. McNeil tells investors who are thinking about buying Tesla stock that they should look at these measures first instead of buying the stock out of irrational excitement. McNeil, the founder and CEO of Execute Capital, says that David Bars is sure that Musk would be open to the idea of another stock split because he wants to make his company one that anyone can invest in. Still, giving executives more shares might also help raise their pay. Still, the split might be good for marketing because it makes the stock look more fair to investors. Barr points out that this is just a point of view and not the truth. Investors are interested in the shares because they think they can be bought for less money. The employee stock buying plan is too hard, which is one reason Tesla has to split. SLO wants to make it easy for their employees to own shares. We don't think they will buy small amounts of stock, though, like some trading sites do. For a number of reasons, Tesla does not want the price of its stock to trade too high. In reaction to a statement made on November 1, Johnson of Gledge Capital said that Tesla would split because what happened last year helped the stock go up. And that seems to be the only thing Tesla cares about. After the split last year, Tesla's shares went up by 12%. They went down over the winter, but they are now up about 70% for the year. Someone on Twitter named Gary Black tried to explain Johnson's comments by saying that Glance can keep his $67 price goal even if Tesla does a 20-to-1 split. Ed Moya, an expert at Awanda, thinks Tesla's chances are better now that the company has announced plans to sell cars to Hertz and Uber. Uber saying that similar orders will probably be filled faster by other hire companies around the world. He says, "I was wrong when I thought $1,000 wouldn't happen." Tesla has grown at a very fast rate. They have responded and dealt with the lack of chips better than their rivals. Some people say the value doesn't make sense, but the stock's growth does. The new plants that Tesla is building in Berlin and Austin should help the company deliver more cars and keep more in stock. This is one reason why a lot of people are sure that Tesla's stock price will split after it went up too much. The opening in Austin is important because we get 4680 data from the cars. This means that there will be no more guesswork about how these batteries would affect the cars. They will probably charge faster, have a longer range, work better, be lighter, and charge faster. Since the 2170 battery came out, we hear all the time about the newest and best technologies from both standard automakers and Chinese automakers. It's the newest and best model that Tesla now makes. It will be a bigger step forward in technology than the 2170 was from the 18,650. And Tesla is to blame for it all. This is another big deal about the Austin opening. The stock price could go up and stay up because of all of these other things. Tesla then announced a split at the end. Because of this, Tesla should have a net profit of $2.5 billion in the fourth quarter. That's the same as $10 billion a year. The stock will go up after the new split, and Moya thinks it will hit $2,000. A lot of regular people follow them, almost like a cult. If they split up, investors will love it, and the stock will go through the roof. For Moya, Tesla doesn't have anything good coming their way. Not even an Apple-style Tesla killer. Apple has shown off a new electric car, but hasn't said when it will be available. Tesla could be a great buy if the stock splits again. Some experts think that Tesla will continue to have a big part of the market, even though it has competitors, because it was one of the first companies to sell electric cars. But in the next few years, the electric car giant will have to deal with both old rivals and new competitors. What would it look like if regular car companies started making electric cars too? Musk tweeted in May 2020 that he thought Tesla's stock was priced too high. The stock dropped by $70 right away. Musk's mysterious way of doing almost everything makes him hard to understand for most people, especially new investors. He knows how to convince both stockholders and people who want to spend. People like to do what Musk does, and in this case, if buyers think the stock will split, they should buy more of it. They are going to. We don't know how much Tesla will go up in value after its next split, but we think the company will wait until each share is worth $2,000 before doing one. How do you feel? Leave a comment below.